Good morning, Tanya and Justin. Thanks for joining me today to talk about Minneapolis-St. Paul. I'm looking forward to hearing the latest and greatest about your cities. With that, Tanya, I'll turn it over to you.
Thanks, Rod. It's a pleasure to join you this morning. Happy to talk a little bit about our great cities in Minneapolis and St. Paul. In 2019, the general metro area was coming off of a little bit of a decline. 2018 was the host year for the Super Bowl. So it's a big year for the Twin Cities. Saw occupancies close to 68% for the metro overall, with rates in the low 120s. 2019, though, saw a slight decline in occupancy coming off a bit of that high in 2018. Rate also dropped slightly that year, with the RevPAR around $81 for 2019. We did see some hotels develop over that period of time too, so that also had an impact on the occupancy a little bit. Demand not quite able to keep up with this new supply for the market, but overall very strong, largely fueled by the presence of many Fortune 500 companies located in the Twin Cities. I'm very lucky to work with Justin Westad here in Minneapolis, and I'd like to have Justin talk to us a little bit about some of the more specific markets within the metro area and what we've seen there.
Thank you, Tanya. Thank you, Rod. Nice to join everyone today. I think more specifically, when we look at markets like Bloomington, in 2019, again, saw just another great year with a lot of tourism and popular destinations at the Mall of America. 2020, however, really with the pandemic, things really kind of started to slide off, and recorded about a 65% of usual business at the Mall of America. And I think probably one of the most interesting stats that we heard during our time in field work and talking with area GMs and owners was that the business that was coming to the Mall of America was from only within about an hour radius of the Twin Cities. So that business that typically comes from the Dakotas and Iowa, it wasn't coming during the pandemic. So it was really just bolstered by people from within the surrounding community who just maybe needed just a weekend away from the kids and just kind of to get out of the house. And yeah, that's kind of really what was going on in the Bloomington market. And also too, with the airport being in Bloomington as well, with many flights being canceled and travel just being postponed. A lot of those hotels did not see any of the demand from the airport as well. So took a bit of a hit, but in terms of kind of the greater Twin Cities, Bloomington actually performed better than Minneapolis. And that's partly in Minneapolis had some the civil unrest, as well as just the more urban cores were harder hit with some of that business transient demand not being not available due to the pandemic.
I think another thing too that's really important to note is the reliance of Canadian travel to the Twin Cities. It's a large metro area close to the Canadian border, relatively speaking, and with the border being shut down for a majority of 2020, that also had a major impact on hotels and tourism. Mall of America specifically saw a big decline because of that.
Okay, great. Let's take a look at your occupancy and average rate forecast next for your market. Give us some insights about those.
In terms of our future outlook for the metro area, we're anticipating 2021 to still be, pretty severely impacted as a result of the pandemic. Many of the large employers in the area have noted that, initially they were hoping to return employees to their offices in the summer of 2021. Now, many of them are stating that won't happen until the fall. It was recently announced that Target will be leaving roughly 1 million square feet of office space in the Twin Cities, and having many of those employees now have a flexible schedule, working from home part of the time, and then also working at other offices throughout the metro area. So that will have an impact in terms of the downtown Minneapolis hotel market. Also, the recovery of group business to the market isn't anticipated to happen until very late in 2021, but more likely in 2022. Those groups that will come to Minneapolis in 2021 will be smaller groups. While there'll be more groups than there were in 2020, according to the Minneapolis Convention Center, those groups will be much smaller, so the number of delegates will be significantly less. As a result of those factors, we really don't anticipate occupancy coming back to 2019 levels until 2024. And similarly with rate, we think that that's going to be the case as well. Again, without that higher rated corporate business returning until much later in 2021, the numbers for 2022 will show more significant rate growth than in 2021. So recovering again to 2019 RevPAR levels that were registered at $81 by 2024 for the greater metro area.
Yeah, and I think probably just to piggyback off that a little bit, I think when we look at hotels that are more limited service and select service, I think those will probably rebound maybe just a little bit faster, given that those hotels typically have the leisure traveler that's maybe a bit more price conscious, or especially given kind of harder times right now. I think that segment might come back to maybe 2019 levels more in the 2023 range, whereas those big box group houses like mini metro areas won't see 2019 levels until like what Tanya said, 2024.
Thank you both for joining me today. This has been a great conversation. Look forward to the next one. Have a great day.